Hey everybody, this is John. Welcome to the free video. Let's of course take a look at Apple. All eyes on Apple. We closed at 317.76. The expected move was 13.50, and after hours right now we're trading at 322. So it's up about 5-ish bucks after hours. So if you did any option trades that you're betting on the expected move, if we open up here, going to be in good shape. Of course, keep in mind it did rally $8 today too, so I think some of the earnings price was already priced in, but it looks solid there. But again, it's not, at this point, the move is less than expected, so it's important to kind of keep that in mind. And then, of course, tomorrow we're going to have Tesla earnings, and so I'm not sure yet what we're going to do with Tesla earnings. We'll definitely post any trades that we do there in the room. What we did do for Apple, and we'll know tomorrow when it opens up. We basically just set up a trade that was based on catching the expected move, and of course if I type in the symbol correctly, that'll help. And so essentially we sold, let's do this, arrange position by order. So sold the 317 call and 317.5 call and the 317.5 put, bought some protection, 1190. And then if we do open up right around here, great, we'll should be able to get out of this like at $8 or something like that and keep the difference. So that's kind of what we're doing there. And then for Starbucks, for an earnings trade, this stock's usually pretty quiet. So we sold a put credit spread for smaller accounts and some naked 2 standard deviation puts. If we open up at 88, we'll be in good shape. Obviously, we'll know a lot more tomorrow. So we'll set up some same stuff for Tesla and kind of see how that's going there. One stock I continue to really like here is Peloton, and I don't like this long term. It's just more for a short term trade. We've got earnings next week, I believe on February 5th. We do have high short interest. We got the implied volatility that's rising. We got a squeeze setting up. So what I'm looking for is just a grind into earnings that I think is very tradable. And as usual, I don't plan to hold through earnings. And then last but not least, let's take a look at the indexes for the Qs here.
Hey traders, it's Danielle. I'm so excited to tell you about the hottest strategy in the market right now and the tool that I've been using to nail it. I'm going to be talking about all this and more, especially how this strategy has led to my biggest profits throughout 2019 and the first month of 2020. Make sure you sign up and I'll see you there.
We had a big drop right into the fire line, and the fire line held beautifully, and from here we've been rallying. So the question is, from here, is it a V-shaped bottom and it's up, up, up and away to new all-time highs, or is this going to be a little different this time? Some of the timing cycles I've seen, I am looking for this to be a little bit more like, I guess we could use this. Both of these are actually pretty good analogies. We could probably use this one as an analogy where, we're up here, we're flying high, we come down to the 89, we kind of retrace, and then we make new lows. That's what I'm looking for. That, of course, doesn't mean it's going to happen, but in this particular market, in terms of, again, cycle timing and all that kind of stuff, I would be surprised if we just go up, up, and away from here. Of course, as per usual, that's not something I would fight. I would wait for a sell signal in order to do that. We did get great, I'll talk about this more in the premium video. We did get a great sell signal here. We were able to buy puts on the spiders and the Qs and take advantage of the Monday gap down. And so I'll be looking for a similar sell signal on those 30 and 78-minute charts to see if we can do that again. All right, that's what we got. You guys have a fantastic evening, and we'll see you at the next update.